So now what we're going to do is we're going to talk about Alabama tax liens. There's a lot of auctions that are taking place this next month. There's some pretty good opportunity in Alabama. So what we want to do is go ahead and talk about how Alabama works, how their tax sale system works, and kind of how the whole process operates. And then we're going to go take a look at a couple of upcoming auctions and look at a few tax liens that are currently on the market.
Yeah, now Alabama is what we consider a tax lien certificate state. So they sell tax liens every year, but they also have tax deeds so their liens, if their liens have been on the books for for over 3 years, then they can also have deeds that are there as
So
well.
with the Alabama, they're going to go ahead and offer tax lien certificates in yearly tax lien sales, but then properties that go over the counter, the county has some flexibility. They used to always send them to the state, but sometimes they can sell them, there locally, but eventually they're going to go over to the state where they'll be issued as tax deeds. So as far as their tax lien certificate sales, a lot of them are going to be held in May, and they use a bid down the interest rate. But there is premium bidding still on the law there, but most of the counties will go ahead and bid down the interest rate, and then they'll go ahead and start the opening bid at any of the back taxes.
Yeah, and so essentially, if you buy the first year lien on a property, you're generally going to get the first right to purchase subsequent tax liens, which is handy. It basically allows you to get the foreclosure costs out of the way already, because if you bought the other subsequent liens on the property, then you may not have much foreclosure cost on it if the redemption period expires and you need to foreclose on the property. The redemption period is 3 years in the area, and it basically pays out 12% annually or 1% a month is how it pays out if you haven't bid down the interest rate here on the liens that you're picking up. But they also do have over-the-counter liens that are available after the sale, and like Steve was saying before, that they basically have a process here for the state to foreclose on liens that were over the counter or not owned by anyone specifically when that redemption period expires. See, what happens if states don't have somebody that is foreclosing on their liens, then they can end up with a whole bunch of liens that should have been foreclosed on but weren't. And the longer they allow that to go, the more underwater the lien gets, because there's just basically more taxes owed on the property. So it really works to their advantage to get that foreclosure done as quickly as possible once the redemption period expires on those properties. And that's what Alabama does with their site, and basically sending them over to over-the-counter deeds. And that is all contained on the same site, meaning that all of the properties, every county has properties that are listed there. So you can basically go from county to county across the state on the same website.
Yeah, exactly. And one thing, that Shade kind of mentioned is that you have the option to purchase the subsequent year's tax lien certificates. So you have that option, but you don't have to. If you decide not to, then they'll go ahead and sell the second year tax lien on the open market. But if you already own the first year, a lot of times it can make sense to go ahead and purchase that second year, especially if you've got a good interest rate. So now what we're going to do is we're going to go ahead and take a look at some of these upcoming Alabama tax sales, look at a few properties, do a quick valuations on each one of them. Now, the one thing about tax lien certificates, I mean, we're looking in here to Alabama. There's a 3-year redemption period. We're going to be earning a 12% interest rate. Now, that's not the greatest interest rate in the world, but it's a safe interest rate. It's being the collateral for that debt is essentially the property itself. So when we're talking about a safe investment, tax lien certificates are I think the safest investment that you can make, or at least in the top 5 safest investments, because you're only paying a small percentage that's backed by real property.
Yeah, so in fact, this first lien that we're looking at here is a lien for $2,409. And if we're looking at it here, it does have a physical address here at Weeping Willow Trail. And if we're looking at it from here, we can see some of the information that's included, which actually is pretty helpful. We do get the address here and their estimated value. So they're estimating the value of the property to be about $300,000. So that $2,500 opening bid amount or lien amount is tiny. It's less than 1% of the property's estimated value, and that's a very safe investment. That's what we want to see with liens, are liens that represent a small percentage of the property's value and not a high percentage. And under 1% is a very low percentage of value. In fact, it's low enough that it's hard to find deals that good. And you can imagine buying 3 of these liens, so paying $7,500 for a property that's valued at $300,000. That would be crazy. And that's essentially kind of what this lien is. It's that kind of lien that would give you that kind of ability. So chances are it's just going to redeem. I mean, they're probably not going to let their $300,000 house go to foreclosure, over a $2,500 lien. But that's where the security is in the investment. It pays out a good solid rate of return here on very safe investments. Let's see how the $300,000 lines up here. And maybe that's just what Zillow will tell us too.
Well, and one thing to think about, I mean, if you could go ahead and you're earning 9% on this, let's say it bids down from 12 to 9%, you're still making a great return on your money that's backed by that type of property. And like Shade said, they're going to pay you back. I mean, the chances of us getting that is about 5%. And probably that house is probably even less, maybe even 2% chance we're going to be able to acquire it. But it's secured against a good property. Now this one here, maybe we have a little bit better chance of getting it. It'll kind of depend. It's really going to be the numbers game. Most of them are going to redeem, but this is a great way for those that want a secure investment in today's type time. Because your money's going to be secured at a rate, and worst case scenario, you're going to get paid off within 3 years. And if they don't pay you off, you would actually own that home.
Yeah, this is a small lien. This is a lien for only $643. So, a small amount here. If we go and look at it, we can actually see that they're estimating the value of the property at about $69,000. What's nice about that is we see consistency in the amount. That $643 is less than 1% of the property's value again. And so that's just like the other property that we looked at. It's going to be highly secure, and I'll bet that the numbers, their valuation they give on the property is probably fairly close as well. That's something that's kind of nice, and so we can see some consistency there, and we can also see just how secure the liens are. That's really what lien investing is all about, is just finding the liens that represent good properties here that you wouldn't have to worry about at all. For $700, what exactly would you be buying a lien against here? It's another single family home, and it's valued at $158,000. That's insane. That amount is less than a 0.5% of the property's value at $750. 3 of those would be. It's like you would have the ability to foreclose on a property valued at $150,000 for $2,000. So the numbers with this are excellent, better than you're going to get almost anywhere. It's highly secured, and it has a very high chance of also just redeeming, because again, it's $150,000+ property. But that $700 lien, you can't always find such good liens for such low amounts as this.
Yeah, well, and we talked about Mississippi last week. We're talking about Alabama. There's these different states that are moving over to online auctions that in the past only had on-site auctions. And so if we can get better rates in a state like Mississippi, as long as we're good with the terms, why not make a better interest rate here? I mean, sure, Florida starts at 18%, but good properties are probably going to bid down to, 6 to 12%. We can still get some of those 18%, but we're going to have to be more creative. But if we can make a good interest rate here, and even though it starts at a lower interest rate, there's still going to be that bidding involved. That's going to happen in every tax lien. That's the way that they sell them, is the bidding down the interest rate. So there's going to be some investors that are willing to take a little bit lower rate than you. But the fact that we can do quick evaluations on these and determine how many that we can bid on and what interest rate, maybe we make 10% on this one, but at that nicer house, we would have had to bid down to 5%. So we decided not to get that nicer house, but we'll get this one because we're getting this one at 10%.
What's interesting is, again, this property is about 1% of value. In terms of liens, it's been very consistent here so far. I mean, $891, and it's valued at about $89,000. I mean, it's exactly 1%, and it's been that way with every single one of the properties that we've looked at here so far. and here's one $359 or $395, so even smaller. It's a $400 lien, which is very small. In some cases, it's hard to find good quality liens here that are they're priced out as low as $400. But this is another one of those where it represents not even 0.5% of the property's value. This is less than 0.5%. We can see the value of it being set there at about $84,000, and this being $400. So yeah, this is another 0.5% lien, which is going to be highly secure. And if you had the chance to foreclose on it, would certainly be worth your time.
Yeah, well, at this point, we've got some of the county record information there. We would just kind of go through a quick stage 1 due diligence. Check the value, check to see if there's any information on there, because maybe something on Redfin or a Google Street View can tell us more about it. Hey, actually, look at this is burnt down within the last 6 months. Let's go ahead and avoid this one. But we don't need to do the same type of due diligence that we would if we were purchasing a tax deed property. Because chances are we're just going to get paid off, and if we do acquire it, we acquired it for such a small percentage of what the property's value is that, in almost every situation, as long as it's a usable property, we have the opportunity to make money.
What a huge sale. Look at that. In this Calhoun County sale, they have 70 pages of properties. I mean, and some of these have got to have maybe 40, 50 properties per page. And so, I mean, that's huge. And that's a list of, I mean, that's thousands of properties.
Yeah, it's a big list. In fact, you probably download it and see exactly how big it is, but there's definitely a lot of properties. There's also some bigger tax liens on here. So let's say that you had a couple of $100,000 you wanted to invest into. It might be better to invest, more money into one certificate versus several certificates. If you're looking to acquire property, then maybe we're going to take that and invest into multiple certificates. And when it comes to a tax liens, also one thing to mention is that, if we can get a higher interest rate on the same valued property, let's say it's a nice real big huge commercial piece of land that's valued at 500,000 versus a home that's valued at 500,000, but we could get 12% off the piece of land and 5% off the home, we're probably going to take the land in most situations because we're going to probably get paid off either way.
Yeah, it's true with liens. We're almost always, better off going with the one we can get the higher interest rate return on, just because they usually end up resulting in that return. This one's really interesting, and it's a high dollar lien. It's a $63,000 lien, but once again, it follows that same formula. There we go again. Look at that. It's less than 1% of the property's value. The property's valued at like $6.8 million almost, and so that 6.3 again, less than 1%, highly secure investment for especially for an investment of this size. Normally I don't think the numbers would be 1%. Normally it would be higher than that. And so this is a very secure property. I mean, if you look at 3 years worth of these investments, you'd basically be at $200,000, which would be a drop in the bucket compared to this property's value of 6.8 million. That's just a remarkable deal.
Yeah, well, and this is a massive, a massive list where there's going to be good taxing certificates that sell for, great value within this particular list.
Look at that, same thing here too. It's crazy. $71,000 lien that has the same address as the previous property we're looking at. So combined total, they're like $130,000 in liens here, and it's probably an annual amount. But we look at this property, and again, that value is at 7.6 million, and $71,000, again, less than 1%. So both of those together, you would essentially have, you pay $130,000 for, but the value of the real estate, would actually be closer to $13-14 million.
Yeah,
so
well,
it'd be highly secure.
One thing that's interesting, if you look at the map on it, that first lien that we looked at was inside of the second lien, but you can see how they have a right of way that's allowing them on the, up here to go on this road and then come over here to the side to access the property in the back. So that first lien was that first property in the front, but the second lien has a road or an access that goes along it, and then accesses the second property there behind it, then you also have all of that land that's included as well. So it's kind of the same complex. You've also got a big chunk of land there, but they've included on that second property the ability to put a road there to access it.
Yeah, it is very interesting here. Now, what I want to show you now. In fact, here we go. So we mentioned before that the state has a website where any of the liens go, especially over-the-counter liens, and they foreclose on those liens. And it's on the Alabama Department of Revenue site. And it's under the transcripts here of delinquent property. If you can see, we have all of the counties that are listed here, for Alabama. So we were just looking at Calhoun County. If we click on there, we can see they have 39 pages of these over-the-counter liens. Are these all being sold as, I guess it depends on the age of them, huh? As to
Yeah.
how they're being sold, is whether or not they're liens or deeds.
Most of them are going to be deeds. There will be some liens that the county is coming over. From what I was reading on the county website, back in the day, it seemed like most of the counties sent them, but it seems like some of the counties are actually selling some of the liens on their own for a little bit and then sending them over. I'd have to look in. That's just the way the county worded it on their website that I was just looking at before today's training. But most of these are going to be tax deed properties. We can see the year certificate numbers. So these are properties from back in 2001, 2002. But all of these properties could be acquired as a tax deed by paying off the back taxes.
Look how old they are. In fact, I think they have these listed from oldest with the tax, in terms of their tax year. That seems to be the starting point here. Properties from 2000, and then we get into 2001, 2002, 3, 4, 5, 6, and 7 there by the seventh page. And so yeah, I think they're doing it by age here. So you're probably right in that these are all deeds that are they're basically just being offered up here by the county with amounts bid the sale listed there.
Yeah, it's kind of like, Mississippi, where they have a big database of old properties that they acquired but before they had online auctions, and they're just kind of sitting on them. So any of these properties, if you go ahead and purchase it, you submit a bid on it, you'll be acquiring a tax deed on the property. Now there is some things that we can talk about in a future date as far as the deeds and kind of what you need to do with them, but you will acquire the tax deed property. You'll have ownership, and there's a lot of different areas in here that are going to have properties. Now some of these counties, maybe 20% of them are going to not have big lists. Jefferson is a big list, like the one that we just looked at. That particular county didn't have any properties on there. Some will only have 10 properties and some will have hundreds, depending on the individual list.
Yeah, it's interesting. They really do vary, quite a bit here. Some of these really don't have anything, and some of them are big, are big counties and have a lot of properties available. And these go back, I mean, we know they go back at least 26 years, because we're seeing, we can see properties that go back that far in terms of the tax sale. And some of these counties, we can see that their year, so they've got one property here from 2000, and then one of those actually might be from 1990. That's even older. But most of these are probably going to be properties that the county has basically foreclosed on. They have very old taxes. They're all deeds. You can see how old those are, and I think they'll accept offers on these.
I'm not sure if they do or not. I know that we'd have to look and see if they do. I can't remember if they do. I don't think that they do, but they very well could, and they definitely should look at it. But you pay the amount that was bid on at the original tax sale on a lot of them. But we have had students that have done well here. There's some things that apply to it, but they'll also, for those investors that are looking at over the counter. In fact, that may be a strategy to implement if there's some counties there that don't sell online this year, contacting them and purchasing the over the counters, especially if you're just looking for that interest rate return.
Yeah, it's interesting. We can see with this county, at least, we're up to 2014 year properties now, down at page 26, but it's all the properties kind of working up to that, you know. So over a 12, 14-year period of time here, they've got 25 properties and 25 pages of properties there that they have foreclosed on. So yeah, I think there's a lot of property here that you can look at, a lot of stuff that's essentially over the counter, and it is a relatively easy database to kind of go through because you're starting from the same point on all of it. And so that part of it is a little bit easier. But Alabama is an interesting state, both tax lien and tax deed opportunities there. You know, especially if you can be there in person. That's really the big thing with Alabama is that nearly all of their sites are still conducted in person, and so
The
it's
on
about being able to attend the sales.
the onlines have moved over. You know, a lot of the counties, like if we go to GovEase, there's
Oh,
probably
that's right. Yeah, just like the ones we
like
were looking at,
yeah. So
70 pages.
yeah, with the online, that's kind of the big difference that's happened over this last year is that there's probably over half of the counties that have moved online, and a bunch of them are doing on GovEase. So that's a pretty good place to go. There's a number of different auctions taking place over this next month.
Yeah, and the sales are so big that uh, you know, there's no shortage of properties. And we saw the last one had 70 pages of properties, which would end up being, uh, I mean, it's a lot, probably more than 1,000 properties in that sale. And a lot of other lien sales are that way. They're different from deed sales in that you're going to have a lot more inventory in them because people are not about to lose the property, you know, forever. And so a lot of people will, you know it goes to the tax seller that's getting a lien placed against it, and it's not a big deal. It's a fairly, you know, normal thing. It's predictable. And so yeah, these sales are going to have good opportunities. A lot of them are pretty new too, and I don't think they have enough bidders to even buy up all their liens, which is why they end up with a lot of over-the-counter stuff.
Yeah, I think it could be a great year to get decent interest rates in Alabama on Alabama tax liens, especially considering the fact that you know, this is kind of the first year that they're offering these tax liens online.